We're celebrating 25 years of joy and celebrating 25 years of excellence. Hello and welcome to the business edition of PM Express with me, Philip Nanfuri. And on today's edition, we're going to be looking at the banking sector again. But this time we have with us a man who sits at the top when it comes to banking issues. We want to see how this COVID-19 issue, the corona conundrum, is affecting the banking industry, which forms an essential part of the financial services space. You know, our banking industry has come from over a period of about 2 to 3 years from what some term as a crisis. We had a number of issues, a number of institutions closed down. There were some changes in the industry. Now we've been hit by a pandemic and nobody saw this coming, even the banking industry. How are we going to surmount these challenges? That's the focus of the business edition of PM Express today with me, Philip Nanfuri, and my guest is Mr. Alhassan Andani. He's the MD of Stanbic Bank, and he's also the president of the Ghana Association of Bankers. That's the umbrella body for all the 23 universal or commercial banks that are operating in the country. We want to speak to him, talk shop, and find out what his views are on this COVID-19, whether he saw it coming perhaps in his dreams and failed to share it with us, and what he sees the impact will be on the banking sector and how we can, most importantly, surmount these challenges. So that's our focus for this edition. I hope you enjoy our show. Please do stay tuned. You're welcome back. This is the business edition of PM Express with me, Philip Nanfuri. And like I indicated, we'll be talking to Mr. Alhassan Andani. He's the MD of Stanbic Bank and he's also the president of the Ghana Association of Bankers. They are the umbrella body for the universal banks operating in the country. And without further ado, I want to say a big thank you to Mr. Andani because he's very, very, very busy. So getting an hour of his time in these times is not something that we should take lightly. So Mr. Andani, I want to say a very, very big thank you.
Thank you
for joining us.
Thank you.
On a broad level, just for an introductory basis, nobody saw this corona conundrum coming. Yeah. It's both a health crisis and economic crisis. Yeah. As an industry chief and even as an individual, when this crisis started manifesting through the entire economy, what first hit you?
I think is the realization that people are at the center of any economy, even the very developed economies and for emerging economies like us. And the relationship between people and the economy couldn't even be much starker. So I think our major concern now is the health issue, health of literally every human being on the planet. And it started in China. And we all thought it would be contained in China and started to creep out. Today, literally all major cities in the world are literally on lockdown and economies are grinding to a halt. It's very frightening, but I think for now the concern is just so that we can get the health message out, all the health warning, so we can preserve life, and hopefully when we can get over it, we'll put the economy back together.
On a banking note, when you look at this crisis, that's on the global level, yeah. You've seen how it's affecting the biggest institutions across the world. Yeah. For you, running one of the biggest banks in the country, what first sets into your mind as a broad picture of this impact on the banking sector?
I think the first thing is just how long will this last? Because every other day that we're unable to get people to work, and banks tend to be at the fulcrum of everything, you know, and therefore as various sectors of the economy grinds because people who are supposed to make it work cannot report for work. And whether you are producing, whether you are buying, whether you are distributing, mention any sector of the business, all of that is gradually grinding to a halt. Now, it's about musical chairs. You know, at the end of the day, who was keeping the economy running? It was money, it was capital, and all that capital sat with the banks, sat with the markets. So the market is suddenly going to have, you know, come into almost a screeching stop. Yeah. And the issue is, Yes, we all have disaster planning scenarios that says that when this happens, this will happen. And we have a disaster planning scenario for situations like this. The big question is just how long would it go, and whether all our worst case scenarios can play out, or it's going to play out maybe more severe than our worst case scenarios. That's really where we are. But at the moment, support health and health delivery, ensure that we can consolidate payments and get people wherever they are keeping safe. At home, they can still get critical payments and critical supplies delivered, and also those essential industry we just can't shut down, that even as they are in a very safe location producing, they will have the necessary resources to keep going. So these are the big issues that are confronting us.
Okay. Yeah. Let's come down to Ghana and we'll look at certain issues in there. But I want us to start off with Bank of Ghana's most recent banking sector report. Yeah. Let's assume COVID-19 doesn't exist. Yeah. And in the report, Bank of Ghana touted a year on since the completion of the financial sector reforms. Yeah. Broadly, everything in there, the key financial sector or financial soundness indicators are all pointing upward. As the head of the association, as a president, your comment on all these results coming from Bank of Ghana's reports 1 year after we had the completion of the financial sector reforms, broadly speaking, how do you see the banking sector based on BOG's assessment?
I think on behalf of my colleagues and indeed all heads of banks and owners of banks and clients, the 2019 results, which most of us have already published and you would see in the newspapers shortly, it's been a resounding success. Whether it's confidence in the financial service sector, as evidenced by clients coming to leave money, their deposits with banks, it's gone up significantly across board. Whether it is confidence in the sense that the real sector, feel they can be supported by banks, as evidenced by our loans and advances portfolio, that has gone up significantly. Whether it's evidenced by governance and risk disciplines, that says that your non-performing loans portfolio can be managed, that has come down significantly, and most banks have seen a recovery on that line. So if we look at all the critical risk factors, if we look at the major performance indicators, customer confidence in deposits, customer confidence in even absorbing more risk assets, and the bank's willingness to do so, it's happened at a much faster and better rate. And that has translated into very, very healthy earnings for literally all the 23 banks. And we are deeply grateful for the pain that we've gone through. We're grateful particularly for the pain the Ghanaian public has gone through in allowing the bailouts and stabilizing the system.
Mr. Ndani, over the course of approximately 2 or 3 years, you would bear witness that the banking sector, in terms of its asset allocation, most of it, some argue, and even look at the Bank of Ghana's reports, you realize that most of it has been skewed towards investments rather than net advances. So I look at December 2019 and I see that banks are doing about 39.2% in investment and about 23.3% in net advances. Some argue that the banks are still lazy because they are holding a proportion of their assets in these instruments, government securities, etc., and less is going to individuals like myself who want to borrow from them. Would you agree with such assertions?
No, you have to put it in context. The relative ratios you have shown is a point in time. But if we were to take the stock of total advances provided by banks, and you were to take the stock that sits with households, i.e. personal borrowers and enterprises and corporates, if you were to take that total stock, it's much, much larger than the stock that sits in investments, but government treasuries and all of that. Now, when people are coming out of crisis and we are all recalibrating our risk-taking criteria and there's money to be managed, you go for the riskless area whilst you recalibrate. So it was probably a point in time where people are now beginning to look at what risk appetite do I have? How do I really select and ensure that I don't create bad assets? Now, if that is happening within a 12-month period, which is what the correction in 2019 was all about, for banks that didn't have big opportunity to deploy, it's only prudent, economically prudent, that they put it in these investments. And most of these investments, anyway, are required by government. If government don't get that, again, another side of the economy, which is the physical, will suffer. But for us, what keeps us in business is that annuity income that comes from creating real assets in the real sector. So I would say that in the short term, yes, it might be true that whilst we're coming out of risk scenarios and whilst there's still a lot of interest rate distortions, vis-a-vis risk, you'd see that kind of behavior. But most of the banks will, for sustainability, be looking to create real assets in the real sector based on very good risk selection criteria, so we avoid all the issues that brought us into 2018 with very high non-performing loans.
Okay. In the course of our conversation, we'll see how this COVID-19 will impact this ratio we're experiencing. But let me start off with this. Bank of Ghana, in its most recent Monetary Policy Committee meeting, and some argue that this was an unexpected move in terms of the scheduling of the meeting. So we're going to have it 18th to 20th, then 23rd we'll see the announcement. But all of a sudden on the 18th, we got all that. It was cut from 16% to 14.5%, 150 basis points. Some have argued that, yes, this is a very good move by the regulator, but may not be enough to provide any necessary stimulus. As a banker, following rate dynamics, this move by Bank of Ghana, what are your thoughts on it?
Well, in terms of the macro performance, which is always the basis upon which Bank of Ghana bases their, and also if you look at the trend, particularly if you look at the trend in inflation, it was pointing southwards, and most of the variables, as you yourself have indicated, to the end of the year were all pointed in the right direction. So based on the principles that they've always used, we expected a downward downward sort of climb down on the policy rate. Whether it was 1% or 1.5% or 2%, was always the finer detail that the central bank will. So in terms of what they arrived at, we were expecting that as a market. We're expecting that, given all the macros, this is where it had to be. So I think generally we think the policy rate was in the right direction.
Zanani, some have argued that, and in your earlier submission, you mentioned interest rate distortions. So some have argued that this monetary policy transmission mechanism, the flow from the monetary policy rates to the Ghana reference rates to your lending rates, so that you and I can borrow comfortably. I always take you out of the equation. Some say this transmission mechanism is broken. So even if they cut the rates by 500 basis points, even from 16 right down to whatever, it's not really have the effect on what you guys are going to give us in terms of the interest rates, because you are also suffering from, like you said, some distortion somewhere. Would you agree with this thing that even though the rate has been cut, it's not really going to affect you to affect the individual?
No, it does. It does. So the what we now call the Ghana reference rate is influenced by 3 key variables. One is the policy rate, 2 is the 91-day treasury bill rate, and then the 3rd is the bank overnight rate. So anytime there's a move in any of these variables, that number changes. The reference rate, which is the base from which we price, changes. And most banks will price off the GR, the Ghana reference rate. So for example, they brought in the policy rate at 14.5 without even changing T-bill rate and or interbank rate. The Ghana reference rate drops from 16.2.3 to about 15.8 thereabout. So certainly, if you were borrowing as a GR plus 2, the base of GR, which was 16, now changes to 15. So your rate comes down by 1%. There's also the margins that are charged over and above the GR, which reflects the various borrowers and their risk categories. And there's a conversation going on, in terms of, and that's where the risk distortions come in. So if you now then have to lend against risk, you're going to start from 0 risk to the 100% risk. And what is 0 risk like? So 0 risk is where T-bills comes in, and then it kind of continues on that yield curve. So that's where we need as a country, especially as we evolve and the economy is maturing, to have some kind of correction in that risk yield curve.
Yeah. Let me move on to another move the Bank of Ghana implemented, the reduction of the minimum reserve requirement from 10% to 8%, giving you guys more room to lend.
Yes.
Now, there's a story, I think that was captured on Bloomberg from Nigeria, that has barred commercial banks from putting their funds in government securities. So the Central Bank of Nigeria doesn't want these banks to have the stimulus to go and lend to government. Do you think this more room would see our commercial banks or universal banks be tempted, one may ask, to put funds in a safe place rather than lend to individuals, especially in this time of COVID-19?
No, that's not. Look, let me be clear. So in terms of even the Bank of Ghana's guidance to us, as commercial banks on following not only the reduction in cash reserve ratio, but also in some capital adequacy calculation modalities, or what we call the capital reserve directive. So that has actually also improved. So our capital adequacies have improved. Our liquidity in terms of the drop in the reserve requirement has also improved. And they were very clear. So it's not from Nigeria, it's from our own central bank guidance to us. This is released so that you can have additional liquidity to stock up, to ensure that we have no liquidity crisis over this COVID period, and also to lend to the real sector. So there's a monitoring system already in place to ensure that as you report your cash reserving, so they will check. It's very easy to check. So you are supposed to do cash reserving of 10%. You are now doing cash reserving of 8%. They can see where the freed up 2% is going. So it's very easy to monitor that we are not putting it in additional government paper, and that we are releasing it, first of all, to stock up so that we can meet liquidity demands on us and also lend to the real sector.
Mr. Ndani, do you think, in spite of all these measures, monetary policy rate cuts, minimum reserve requirement cuts, and other things they did, you've mentioned the capital adequacy issues, do you think we need additional stimulus from the Bank of Ghana, monetary stimulus? So essentially, do you think Bank of Ghana needs to pump in more money for you guys?
Well, not necessarily for us. The economy is in a tailspin right now, and I'm sure we'll all wait to hear what the managers of the economy will say. It's not just Ghana, it's all around the world. And we know what the Fed is doing, we know what the ECB is doing, we know what the central bank, Bank of England is doing, and central banks all around the world, and monetary authorities all around the world. But look, these are fragile economies that we have. So there will have to be some kind of action between the government and the central bank, but not liquidity for banks, but liquidity for critical sectors of the economy, in terms of making sure that essential services and whatever is required to take us as a country across the hurdle will. Banks will certainly continue to operate. I mean, in every sort of crisis, there are winners and there will be losers. So the idea is to ensure that there's support, where there's good national reserves. There's good, in the US and other places where they can print, 2 trillion has already been approved. Exactly. And it would be for workers staying at home doing nothing. Do we have the capacity here? Certainly no. So to the extent that banks will continue to operate in a profitable sector, what we always have to avoid is to relax any kind of operational standards that when we are over with COVID, then we have a banking sector, a financial services sector that is laden with problems that we cannot resolve and then have to go through another painful exercise. So I think the central bank is ensuring that the disciplines that brought us across 2018 into 2019 will continue to apply even in this difficult time. But we have to be pragmatic in terms of managing the individual risks as they come to us. But in terms of overall support to the economy, there's a conversation between the central bank and the government to
okay. Yeah. Let me put this question properly. Have you been told by the central bank to target certain areas of the economy in terms of what some we call moral suasion? So they've told you guys that, you know what, agricultural sector needs more money in this COVID-19 period. Direct your funds there. Has there been any sort of directive of that sort?
What the central bank always will ask us to do is to support the SME sector. the Ghanaian SME sector that needs a lot of support. That, yes, I wouldn't say direct. They've always recommended that, you know, we look to support local enterprises and especially SMEs. Again, with this kind of situation that is coming, your hospitality industries will be hard hit. So what do you do in order to rearrange your banking relationships with them to get them over the hump? Yeah, all those cautions are there. And we were working with very close, and clearly they've indicated that they will work with the banks, you know, as we go through all these case-by-case cases to look at. But in terms of overall direction of support, they want us to provide a lot more lending support to the SME sector in Ghana.
Okay, this is the business edition of PM Express. My name is Philip Nanfuri. We're having a chat with Mr. Alassane Andani. He's the Managing Director for Stanbic Bank Ghana, and he's also the President of the Ghana Association of Bankers. We're taking a quick break. We'll be right back. You're welcome back from the break. My name is Philip Nanfuri, and this is the business edition of PM Express. We're having a talk with Mr. Andani. He's the president of the Ghana Association of Bankers. We're going through some of Bank of Ghana's measures they put in place to provide some stimulus in these perilous times, and how are we going to overcome the COVID-19 conundrum. And he was taking us through what the bankers' perspective is when it comes to some of the measures Bank of Ghana has instituted. He made a point about SMEs. I want to pick up what he said and reference Mr. Andani. A couple of days ago, I spoke to Mr. Kenneth Thompson, CEO of Dalex Finance, who argues that some of the measures Bank of Ghana has instituted, I know that's not your operating field, but I want to get your perspective on this. He says some of the measures will go more to help the 23 commercial banks than the specialized deposit-taking institutions, such as the finance houses, microfinance institutions, and that banks don't lend to the SMEs. Will you agree with him in that space when it comes to the SME lending? Because there's always something we hear in the air: banks don't lend to SMEs, banks don't lend to SMEs. But here you are saying banks lend to SMEs. In this time, should we see a guarantee from the banks that SMEs will be taken care of? You know,
it's a talk is talk, but we can actually examine and interrogate the data. Data won't lie. You know, so let us have a classification of what is SME, what is Ghanaian enterprise, and we can easily measure what banks have lent out to these enterprises. It's there. It's evidenced by data. So if anybody says we don't lend to SMEs, that cannot be supported by the data. The other aspect of, especially in this era, and at least we've already had a meeting with the central bank. I mean the Ghana Association of Bankers. And their caution was always, make sure you support, especially the other SDIs, because in this era, there's a very easy contagion effect. So for all those SDIs that have relationship with banks, let's ensure that there's some liquidity flow to them, you know, so that they can also keep client payments going uninterrupted. This has already been made clear to us, and for those of us that support these SDIs, we would do so. Look here, there will never be a time X in that we can say that all SMEs in Ghana have gotten all of their fill in terms of credit. It's an evolving business, it's an evolving situation. New enterprises are coming up. They will get support, and they will get support from the commercial banks.
Okay. Yeah. In terms of the effect of the coronavirus, so we are having health effects, economic effects, financial effects, even psychological effects. The paranoia we've gone through. Now I carry sanitizer in my pockets all the time. Everybody's sanitizing left, right, center. On the financial sector, on the banking sector, Mr. Andani, is it early days yet to ask if there has been a negative effect on the operations of banks in the country? E.g., people are already defaulting on their loans. People are making unnecessary and excess withdrawals. People are preferring to redeem their investments with you, fixed deposits, short-term deposits, etc. Some are also calling for more loans. Do we have a negative connotation of the virus on operations, or it's too early to tell?
It's absolutely too early to tell. In fact, I can tell you up to close of business yesterday, none of these, has happened, not within our enterprise. And over the last couple of days, literally every day for the last week, the Ghana Association of Bankers, we've been on a chorus call with each other, just monitoring the situation. None of that has happened. All we're trying and saying is that as an industry, we will keep, we're essential, we are critical, even where things come to a crunch. We have to be available to provide minimum services, payment services, and ensure that money can flow and people can get essential services. So we will continue to do that. But would it impact us? Absolutely. I mean, business volumes have gone down. I mean, GDP is reported to contract, significantly. If that happens, it will certainly impact us. Companies have to pull back, even in some cases shut down, operations just to keep their people safe. So that's why I said, it's quickly now dawned on us that people come first before the economy. So when there are no people, there's no economy. So it's a level, and it's a very sad time, but it's probably made the people agenda even much more. So to the extent that all people can't even attend to their businesses, which is leading to contraction, it's certainly going to impact business level activities, which is what drive banking activities. But early date yet to say how much this is. That's why I said in the beginning, our biggest worry is just how long would this go?
Sandani, I have to ask this because we've come from a situation where jobs were lost in the sector.
Yeah.
It's early days yet, agreed. Yeah. But if stuff hits the fan and it becomes too much, do we think some institutions will have to cut back on their force, their staff numbers when it comes to banks, just to stay afloat? Is that a scenario that we should even model or think of?
I think it's, as a prudent person, business person, and as a prudent country, look, we've got to model that. We have to have, in our view, two stands: capital preservation. We've got to preserve capital. When all of this is over, do we have the capacity to put ourselves together and recreate an economy to serve people? Then the other thing is, do we have what it takes today to meet people's minimum demands? So it's not business as usual. So if, for example, in the good days you were spending and splashing 1,000 cedis, under a corona lockdown situation, you probably should be looking to spend 20 cedis. So that's at your individual personal level. Certainly, as a company, if all the business as usual, you're paying out a wage bill of X million cedis, and nothing is happening, you just don't have the capacity to continue to pay out that X billion wage. So people have to be prudent around how they conserve liquidity and how they conserve capital, so that after this whole debacle, after this whole difficult period, we'll have the capacity to restart our lives. We can't grind everything to a halt. So we have to take preventive. It's just like, hunkering down. You can't spend 1,000 cedis anymore today. You have to spend 100 cedis. So similarly for companies, you have to do so. You have to find a way to conserve capital. You don't have it.
Okay. Yeah. Bank of Ghana mentioned that given the way the virus is moving, at one point it said a slowdown in our growth rate to 2.5%. Another part of their press release, even I argue there was a scenario on a no scenario, because how the virus is moving, you can't really tell.
You can't.
For banks, in terms of forward guidance, your profits, revenue lines, etc., have you guys started making some amendments to what you projected at the beginning of the year for your revenue lines, bottom line, or you are holding on till now to see how things will go? What's that going like?
That revision in terms of revenue and profit line is given. That's going to slide. That's going to slide downwards sharply. So what I said is that our stance is capital preservation. We've got to preserve capital to above those minimum levels, and also ensure that we have liquidity, because we're a demand business. People have left their deposits with us and will come for it. So we are prepared, in terms of liquidity to meet those, and also we take the appropriate action to preserve the capital that we've been entrusted with, and to do whatever is required to keep minimum essential services that are required and which are being paid for during this period to keep going. But in terms of profit, this is an extraordinary year. And I don't think there's any company, probably only the pharmaceutical companies or some inventor who find a new test kit or cure, who probably will be counting profits. Everybody else, including individuals, would have to see a depression in their earnings and whatever profitability is.
You spoke about capital preservation, which is very important to your business. In this time that you are supposed to balance, one, that's capital preservation. Two, ensuring that businesses have some sort of lifeline or lifeblood in terms of stimulus, lending, etc. Do you think that lending requirements will be eased in a manner that will keep the standards, that will not affect your capital, and at the same time ensure that there's a quick delivery in terms of credit to customers? Your lending requirements as an industry, how are we going to go through that? Because we don't want a situation where you go in a lax manner, causes problems down the lines, or how are we going to work around it?
No, part of capital preservation is risk appetite, and how you kind of take a bet on the future. Now, with this scenario, all cash flows are uncertain. There's absolutely no certain cash flow. And banks and individuals and companies operate their businesses based on anticipated cash flows. Now, tell me, under this COVID-19 situation, who has any anticipation? Even the best anticipations until 3 weeks ago have been thrown out of the window. So we'll have to sit down and say, hey, look, even the existing facilities that we have in our books. So we said that we created these with you. I mean, these are our clients having a conversation to say, this was put in place based on this best case scenario and even this worst case scenario. What has happened has surpassed all of the worst case planning. How do we recalibrate? So we do that. We will do that for literally every borrower that sits on our books. And certainly, if there's any new urgent request, that urgent request would also be evaluated based on, under this very uncertain scenario, where are we going to get that takeout and when? So in terms of tenors for existing book, you generally see the tenors for the existing book moving out as people lose their ability to service it. But they acknowledge, we all know that we plan for the best and even a stress scenario, but this is worse than we actually would have stressed. So we will find a way to recalibrate. So you'll probably see tenor extensions and things like that. We will get over this. I mean, the kind of global effort that is being put into it, we'll get over it. Question is, are you saying 6 months? Are you saying 3 months? Are you saying 1 year? So just how long is the pain the world can take, the individual can take, companies can take? That's where the issue is at the moment.
Mr. Ndani, on non-performing loans, it's been a very big issue over time, and we saw a reduction in it due to some of the policies the banks put in place and the Bank of Ghana's permission for you guys to write off some of them. Some may say we should anticipate a number of non-performing loans in this period. Do you think Bank of Ghana, if we record an increase beyond a certain level, do you think it would be prudent for the central bank to step in and buy these bad loans off you? Do we see a scenario like that happening in this country?
Look, that I haven't, I mean, the Bank of Ghana hasn't discussed that with me, or us as an association, and I wouldn't know what will happen. Yeah. But look here, how would the bad debts, okay, maybe if there are some companies that can stand the stress and cannot survive even after the virus is cleared and everybody's back to work, and therefore whatever commitments they had, they cannot meet it. We don't know who will be impacted. Yeah. Already in some parts of the world, airlines, budget airlines have collapsed, even the first week of Corona. So those things will happen. But do we have those kind of highly elastic companies that will just drop because cash flows have dried up? The jury is out there. Normally banks will see bad debts 12 months, 18 months after the end of the crisis. But given the vigilance, given the kind of credit disciplines, the governance disciplines that were reinforced during the banking crisis by the central bank, we expect that we'll be much more diligent, we'll be much more proactive, we will rearrange, and some of the causes of the non-performing in the past really weren't probably related to real banking sector activities. But at the moment, as I said, given all the governance disciplines and all the risk disciplines and monitoring, particularly from the central bank, we'll be much more proactive, and I'm sure we can manage and come out.
So I think, banks should be cautious.
Yes.
In this period.
Yes, absolutely
when doing that.
Absolutely cautious. Yeah.
Okay.
Capital preservation, liquidity management important to ensure that, and giving support to the essential sectors.
Okay. Yeah. Speaking of essential sectors, we know there has been monetary stimulus from Bank of Ghana in terms of some of these measures. Some may not call it direct liquidity injection, but through you, there has been some amount made. We also see from the fiscal side, from the government side, something coming in. Mr. Ndani, you've played in this space for a very long time, even twice my age, I may say.
Make me look like an old man.
You are a very astute market leader. Where do you think we should be focusing stimulus, fiscal, monetary, combination of two in the economy? Which sectors do you think, apart from the banking sector, which sectors do you think we should focus on?
First, health. Health. The major concern of everybody now is health. Keep the population healthy. Whatever we can do, to stop the virus, that's number one. Those who haven't got it, let's take measures that we don't spread it. Those who've got it, we take measures to ensure that they can be cured. It's number one, health. So all financial resources must be targeted to health, preserving life. For me, the next thing is agriculture. Remember that in Ghana, we have only, probably most of the country have one major rainy season, which is just around the corner. And this is happening right bang in the middle of the COVID-19. How do we ensure that sufficient resources are allocated? And of course, the farmers already, not too many of us like to be in the field, so they have social distance or physical distancing. But how do we ensure that they have the inputs on time, to ensure at least we have food? Because we don't have the opportunity for another rainy season, starting from March to probably July. So if we miss that rainy season, we would come out not only with other sectors of the economy in trouble, but food also being in trouble. So I think for me, health and agriculture, if we can get our farmers properly tooled up and resourced to get into this major season, with all the resources on time, so that at least we can have some food. Everything else will recover.
Mr. Ndani, this is a time where we are pushing the use of electronic systems as we reduce physical contact, etc. Yes. With the use of electronic systems and the whole pressure within the system, may come an issue of cybercrime. At this point, can we say our banks are in a good position to ensure that people don't take advantage of the mayhem in the system to, one may say, cause some problems when it comes to moving of funds electronically? Because it's a time where we can argue. Since last week, I've made all my payments using my mobile. How are we working as an industry to ensure that systems are safe and are not pressured in terms of too many people being on it at the same time? What are some of the things that we're going to do there?
I think in that area, one is the capacity of the providers to ensure that, look, if you were seeing X amount of traffic under this COVID situation, that X amount has simply quadrupled or gone in exponential. Have you built sufficient capacity to take the traffic that will flow? That, for me, is a massive investment opportunity. And again, we have to be careful because, massive investment opportunity. And when people have sensed how easy, how convenient, to do this digital transaction, even after COVID, they're not going to come back to manual processes. So in terms of, again, winners for this period, for me, it's all the digital and mobile network operators who carry this infrastructure to invest, to expand, to take the traffic. The most critical thing, again, is cybersecurity. It's about the scale, but in terms of nothing new is being introduced. It's just the scale which has gone up. And also, we will have to rearrange for people to work, because we still need people to work. They may not physically work in the office, they'll work at homes, they'll work at locations that are safe and secure, but they will still be using the digital. So our cybersecurity surveillance is gone extremely high right now. Cybersecurity is quadrupled. We've just lifted it to another level. And I think just recently there were some issues around, and we had support from the police cybersecurity unit in terms of alerting us what was going on. So it's not just our bank level cybersecurity, we have the central bank cybersecurity activity, and we have what I was pleasantly surprised with, the police cybersecurity warnings as of last week. So I'm sure we will, it's a dark world as far as cybersecurity is concerned. You can never say that you are 100% certain of your cybersecurity vigilance, but I must say that our level of preparedness is very high.
Every cloud has a silver lining, and some may argue that in this COVID-19 pandemic, as we are encouraging people to move to electronic transactions, do you think this may present a good opportunity for Ghana? As we've been looking for cash light, do you think post this COVID-19, you will see a dramatic change in the way people transact? So now we all sit at home and use our phones rather than come to your banking halls. Do you think there will be some good news in there?
Absolutely, absolutely good news. And I think the banks are trying to encourage that by even lifting some of the charges that we currently levy on those channels. One, because everybody's in a stressed financial position. Two, because we just want people to get into it. In fact, this, to your point, might leapfrog everyone, leapfrog the world, leapfrog Ghana into the fourth industrial age, where everything is data and digital driven, and business organizations. And I think I saw a very famous quote from one of my good friends who say, "Is work something to do or a place to come to?" So that's the question we have to answer. So after COVID, we'll find that work is something to do, but work is not a place to come to. So we can get a lot of this work done at very convenient locations. People will still have family life, and still do brilliant work.
Alassane Andani, he is the president of the Ghana Association of Bankers. He's also the managing director, some may call it chief executive of Stanbic Bank Ghana. My name is Philip Nanfuri. This is Business Edition of PM Express. We're taking our quick final break. We'll be right back. You're welcome back from the break, and this is the last lap in our discussion with Alassane Andani, who is the president of the Ghana Association of Bankers. We are looking at the impacts of COVID-19 on the banking industry, and as a chief, one who sits at the top in the industry, he's given us his insights, and all is well and good. Banks are still going to operate, but with a bit more caution, so that we'll be able to weather the storm. Remember, we've just come out of an issue, 2017 till date. We've had a number of institutions go down. Once upon a time, there were 36 banks in the country. Today, we have 23, still strong. And like I said earlier on, per Bank of Ghana's banking sector report, all signs point to greatness, if I may say so, in the banking industry. Just before we went on the break, I asked him a question about whether there's a silver lining in there to see all of us move away from the traditional brick and mortar banking system where we all go and crowd our banking halls and complain of long lines. The lines are created by you and I and nobody else. We'll start moving on to our electronic transactions. And that's why I have my phone here to demonstrate that we can use it to transact. Last week I bought a lot of stuff without using cash, all electronically, mobile money, etc., and stuff like that. So we're going to continue our conversation with Mr. Andani. And as we wind down on the conversation, Mr. Andani, one thing that comes to mind is post-COVID-19. I know, and I'm hoping and praying that we would surmount this challenge globally. But the economic impacts will still linger. 2008 was the financial crisis. Even as at 2015-16, we're still feeling the impacts globally of the 2008 financial crisis. What do you think is the biggest fear for the banking industry post-COVID-19?
The speed of recovery. The speed of recovery of the economy.
The economy.
Because the longer it takes, the more the deterioration. That deterioration is on our pan. It's on our laps. So the speed of recovery is all of it.
Do you think, with regards to time, I know it will be impractical to put a time frame to this, but looking at even the 2000 financial crisis, some argue it's taking a decade for it to really wipe out. developing economy like ours, some say frontier markets, what should be long and what should be short for us to recover from this? Because some will be wondering, okay, so if the advanced economies took 5 years, almost 10 years for them to really feel the effects, and even with that, they were still doing their quantitative easing, etc., and still complaining of low growth in the euro area, etc. Developing an economy like ours, what should we be looking at?
Well, I think we have to stay on the positive side. You know, we just have to, first of all, we are so dependent on the developed economies. We're very, even as whether we produce for export, we're exporting to their markets. So how quickly they can recover to take all of our primary products. Remember that most of Africa, you know, whether we're exporting oil or gold, or they're all primary products. And those economies must recover to be able to take primary products. And therefore, our speed of recovery is dependent upon, and also just physical help. We need financial help. The capital markets must be open to us. We need, you know, foreign direct investment. Now, if their economies are crashed and they have to go back and reinvest in the economy, how much of foreign direct investments will come through? How much of the capital market pay attention to us when they still have a lot of scope to lend into those developed markets? So this probably is also an opportunity for us to start to think inwardly and see what can we do for ourselves. Yeah. And I think that also could be a silver lining. So if we don't have to wait for them to recover in order to take our primary products, what are we doing with beneficiation of our own primary products to join the global marketplace and also particularly produce things that we can easily. I've already started to see a lot of innovative things coming out just in the 2 weeks of this COVID. You know, if you see the number of innovations that people are already putting in place, it's staggering. So this could be the time for us to have a hard conversation with ourselves. To your point, it's going to take some time, even with all the quantitative business, to repair those economies, to get people back to work. And the nature of firms will change. Unemployment levels will probably be very high there for a very long time because companies will not, after COVID, just come back to business as usual with all the numbers. So if these people are let go, their governments will have to support them and retrain them to get into other industries. Now, there won't be much surplus left for us. So we have to have this at the back of our minds and start to organize ourselves. Thank God for the Africa Free Continental Trade Area. We can begin to actually give life to that because now and then Africa with all this population and resources and talent can begin to produce for itself. So those are the areas that the big boys in the managing the economy and nations should pay their attention to. We're not looking for the usual recovery, which is wait until this big economies recover and then we can take off. We cannot wait. So really time for us to jumpstart ours and be much more inward looking. Now give the African Free Continental Trade, its real life. So by the time they wake up, we've got a functioning African economy.
Mr. Ndani, the positioning of businesses with regards to this crisis and the banking industry, how businesses interface. What do you think they should do? You lend to a wide array of industries, so you have an insight into how different industries will or sectors will react. What do you think the general positioning should be, so that people don't either willingly take measures that will affect you badly, or one may say, geez, okay, maybe I think the banks are going to go down, so I won't pay my loan. What do you think should be the general position?
No. You know what? Most of whatever we do with our clients are contractual. Whether we take deposits from you is contractual. We are contracted to give your deposit back to you. Whether you take a loan from us is contractual. You're contracted to bring the loan back. The law costs will still be there, and contracts enforcement will still be there. But that's not really the end of the world. I mean, after COVID, there will still be life. So I think we should look in a going concern basis. And the going concern basis require all of us to be pragmatic around, even now we have facilities that we have approved for people companies that planned a certain expansion, that planned a certain growth. Now all of that wouldn't happen, or most likely would not happen. So they probably would be the first to say, no, I don't want to use this commitment, which is what we'll welcome. And so people will be pragmatic. After COVID, there will be individuals, there will be companies, and we still want the respect for contracts. We will, as banks, hold our end of the bargain to ensure, and I did say that one of the things that we are paying attention to in this period is liquidity preservation, to be sure that we can give our depositors money as they need it. And therefore, I expect that the wider economy and companies that we deal with will respect the contracts and know that I don't know of any business that says we want to be in business for only 5 years or 10 years. Everybody's looking for sustainability. So let's respect our contracts. Let's be pragmatic with each other, and then see how we can all come out winners at the end of the day.
Zanzani, faith, confidence, trust. These three, some argue you can use them interchangeably, but I always want to separate them. Were nearly eroded when the banking sector issue started. And then we also had the specialized deposit-taking institutions feed into it. So you have a situation where people don't want to even believe. I remember people have been asking me, where should I invest my money? Which bank should I go to? What should I do? We are going to have another issue that's going to test us. What do you say out there to your customers, to clients of all the industry, of all the banks? I beg your pardon. What are you going to tell them to keep it together to ensure that when they need the necessary funds, their financial institutions can come through for them?
Yeah. No, I think that's a very interesting way to, whether it's faith. I think we would leave faith for all of us, especially this time. All of us should improve our faith. All of us should improve our faith. Yeah. But confidence and trust. So even as the banking sector went through the most difficult period that I have seen, government, Bank of Ghana, and the banks ensure that most of the depositors were paid. It doesn't happen in many parts of the world. I think this was unique for Ghana, where the Ghana government, working with the Bank of Ghana, literally guaranteed every depositor. So for the banks that even failed, the depositors got their money back. So that's where the faith and confidence of the banking sector and the government, our regulator, comes in. And we should not lose sight of it. We've actually, in terms of the industry has been recalibrated to behave better. So probably the frequency of these failures would minimize or disappear. But I would only say that in terms of, so the biggest problem we have is the clients holding their side of the bargain, which is those who rightfully contracted loans should come and pay so that we can also repay the government and our regulator for the interventions they gave to us. So I think for us, trust, the biggest currency for banks, the biggest currency for us is trust. We would not do anything to undermine the confidence that our clients have put in us. So for us, it's trust.
Mr. Nani, final one.
Yeah.
Will the industry, will and can the industry weather the storm?
Absolutely. Absolutely we'll weather the storm. We can and we will weather the storm.
So you heard it from the president of the Ghana Association of Bankers, Mr. Alassane Andani. He's giving you reassurance. No need for panic. No need for some say pandemonium. Just be calm. We've discussed a lot with him. We've looked at the industry, and all signs point to a resilient banking industry. I want to say a big thank you for your time. This has been the business edition of PM Express. My guest, his name again, Mr. Alassane Andani, and me, Philip Nanfuri. Do have a good night.